What next for Dogecoin as Bitcoin death cross puts major Memecoin in crosshairs? Bitcoin's death cross, a bearish signal, occurred as the 50-day moving average fell below the 200-day moving average. Doge rallied 4.4% to $0.156 before late session selling erased momentum. But Bitcoin's newly triggered death cross now threatens to reshape Memecoin market structure heading into the week. Bitcoin triggered a death cross on November 16th as the 50-day MA fell below the 200-day MA for the first time since 2022. Historically, a bearish macro signal.BTC dropped below $94,000 for the first time since May, deepening market-wide fear as sentiment plunged to extreme fear, 10, on the Fear and Greed Index. Analysts warn that while the death cross doesn't guarantee further crashes, it tends to pressure high-beta assets like DOGE during liquidity contractions. Whale selling and accelerating spot. Bitcoin ETF outflows contributed to broader risk-off contagion. Memecoin flows tightened as traders rotated into higher liquidity majors, despite DOGE seeing intermittent whale accumulation events. DOGE climbed 4.41% to $0.156, with volume spiking 29.6% above weekly averages. Strong bid defense appeared at $0.1551 to $0.1580, where buyers absorbed heavy sell pressure. DOGE broke above $0.1640 intraday before trending lower into the close. Final hour profit-taking triggered a 2.57% drop, sending DOGE back toward key support. DOGE traded within a 5.8% intraday range, tracking broader BTC-driven volatility. Dogecoin opened the session with clear bullish structure, building an ascending pattern driven by strong volume at the $0.158 support zone. The rally benefited from broader market stabilization ahead of the BTC death cross event, but failed to produce a decisive breakout beyond the $0.163 to $0.165 resistance band. The afternoon volume spike, 1.26 B DOGE traded, confirmed aggressive defensive support and suggested institutional accumulation was present beneath market price. However, the tone shifted dramatically into the close, as BTC slid further below $94,000 and the death cross narrative spread across futures desks. DOGE experienced algorithmic rotational selling identical to previous BTC-driven risk-off episodes. The resulting 2.57% decline broke the final higher-low structure and confirmed that DOGE remains highly sensitive to Bitcoin's macro trend shifts. Market focus now shifts to whether Dogecoin can absorb Bitcoin-driven volatility or whether the newly formed death cross will suppress Memecoin momentum for several sessions. The $0.158 zone is the most important level on the chart. Holding this area would signal that whale accumulation is offsetting macro selling pressure. A close below $0.158, however, puts DOGE at immediate risk of sliding toward $0.152 to $0.148 as liquidity thins. On the upside, DOGE must reclaim $0.1604 and then decisively clear $0.163 to $0.165 to neutralize the impact of BTC's macro breakdown. Traders should monitor volume closely. Contracting volume favors sideways chop, while renewed spikes above 1B DOGE indicate the potential for trend continuation. Additionally, Bitcoin ETF outflows and BTC's ability to hold above $93,000 will dictate volatility across all meme coins, making macro correlation the dominant factor in DOGE's near-term direction.